A very good morning to all of you, respected members of the dais and dear students. Well, with Surat's permission, I think I'll just take up the three questions which came up, because sitting there as a regulator and getting to know from the regulator, from the horse's mouth, I think would satisfy you much more. One question, can I take those three questions? Just supplementing what you said. The question from you, ma'am, was how does RBI come up with these guidelines? Like, do we have nothing else to do than tweak the circular every year? That's not the case. If we talk about priority sector lending, from 1972, when actually priority sector was identified, some sectors were identified as priority sector. Targets came up, 33 and 1/3% came up in 1979. Banks were given a 5-year frame. Slowly it went up to 40% in 1985. Up till 2007, not much of change in the priority sector guidelines. Every year we don't change guidelines. In 2007 was the last change when we had a committee appointed under the chairmanship of Mr. Murthy. He suggested some changes. New sectors came into the priority sector guidelines. Then, following the microfinance issue in Andhra Pradesh, there was a big uproar in the country. We had a Metamorphosis committee which was appointed. It came up with its recommendations. In 2011, the RBI appointed a MV Nair committee headed by the CMD of Union Bank. He came up with recommendations in February 2012. The latest circular which Surat spoke about, July 20th, 2012, where priority sector guidelines were totally reformed. Okay, that came up based on the recommendations of the MV Nair committee. So this is the genesis of priority sector. Every year we don't do it. July 20th, when the circular came up, banks raised a hue and cry because things which were very easy to finance under priority sector were slowly removed from the ambit of direct agriculture. Corporate financing. I'll just tell you an anecdote. Maximum agriculture loans should have gone from which branches? The rural branches. But the paradox is, the metropolitan cities contribute to maximum priority sector lending. This is a paradox in the Indian scenario. So basically, to ensure that intermediaries are not there, finance goes directly to the farmers. We have tweaked this circular and we came up with revised instructions again on October 17, 2012. This is the latest change that we made to our guidelines. Okay, so it's an evolving thing. It may not happen. See, it's like the foreign exchange, which is so volatile now. Earlier, maybe 2-3 years back, even a 0.01 paise change in the forex rate would create a lot of upheavals in the market. But if you read the papers now, you find there's a 128 paise point rise, point fall and all that. So it's a free economy now. So that is not what the case is with priority sector. So we generally tweak our circulars only when we feel there is a need for it. Have I answered your question? The next question was on benefits to banks as far as the circular is concerned. Sir, I hope this does not eat into my time. Yeah. So what is the benefit which flows into banks? The priority sector guidelines are not meant for banks. Okay, remove that. It's basically meant for the poor people. Those 6 areas whom he covered, priority sector guidelines are to ensure that those 6 categories get credit from banks. So it's not to help banks, it's basically to help the common man. Probably after your course, when you join a bank, you'll also be adhering to all these circular and guidelines. Basically, it's meant for the poor people, for those 6 sectors. When you talk about a farmer, he has no recourse to finance. If a bank doesn't finance him, he has got the non-institutional borrowers who charge exorbitant rates. He has nothing like equity or something. Have you heard of farmers going in for equity? They cannot raise finance in any form. So they need to have a recourse of easy finance, transparent finance at low rates of interest. That's why the priority sector guidelines. It's not meant for banks, it's basically meant for whom? The poor people. Those 6 sectors who came under priority sector, the circulars are basically meant to assist them, not the banks. That's a misconception. Next was on agriculture NPA, the reasons for default. Yes. Basically, one reason I could attribute it is the attitude of the people. Probably in the morning when Parjoshi sir was addressing, he spoke about the education loans and he mentioned about bankers not giving loans, fearing default. See, you and me, we are responsible for defaults. Education loan, it's a big grey area as far as banks are concerned because repayments are not happening. Who's responsible? You and me. Tendency for farmers also. See, 4 years back there was an agriculture debt waiver scheme. Anticipating something of a similar nature, people have stopped repaying loans. So the culture has set in where people feel, India is a democracy, we still feel that, yes, I take a loan, whatever I can get. I take whatever is due to me, whatever is yours also should become my share, I need not repay. Because probably government, in some sort of an incentive for getting votes, they may announce something. So this attitude has crept in. So NPA is basically going up because of this attitude from the so-called borrowers. So if you plan to take an education loan up to 4 lakh, it's all collateral free. But as a citizen of this country, ensure that you repay your loans. And percolate this message to the masses also. If a bank doesn't get the loans that it gives to its customers, depositors are going to face the brunt of it. There's going to be a run on the bank. Okay, so agriculture NPA basically because of this sort of an attitude. The second reason is loans not going on time. You ask for a loan of 50,000 which may suffice, which may be required for him to meet his immediate requirement. Traditionally, we have a tendency to not give the entire due. He asks for 50, I get some pleasure maybe in just sanctioning 40,000, which he would neither be able to generate sustainable income, might as well it ends up as a consumption loan. So as a banker, ensure that if you need to give a person X amount, if that is his requirement, if you can justify his requirement, please pay for it. Okay, so that is another reason for NPAs. Empowerment of women from the rural areas, yes, government, Indian government, we are a country of geniuses. We have got huge schemes, government-sponsored schemes. We had the erstwhile SGSY. It's now renamed as the NRLM. Schemes like this which can really empower women. If you look at that scheme, it's a scheme where it gets people together. It helps them to get into a micro-enterprise stage. That is the final level of an SGSY. But in this country, what we see is women get together, there's an element of subsidy in whatever they get, they avail the subsidy and they don't think of something beyond. So empowerment schemes are there, but how best it is taken care of and made use of and availed by the women folk is debatable. The last thing is new private sector banks. Is it a threat? It's not a threat. We have received applications for bank licensing. We have basically been slow. See, 2004 we gave licenses to 2 entities, Yes Bank and Kotak Mahindra. After that, almost 8 years. Is RBI sleeping? RBI is not sleeping. But banking is an institution where it entails a lot of risks. If you give a banking license to any Tom, Dick and Harry, it's finally the country's economy which is going to suffer in case of any problems created by that corporate entity. So we have placed stringent norms for applying for license. Again, probably 18 months to 2 years it may take for giving licenses. We need to ensure that the depositors' interests are taken care of if an entity is given a license. So private banks' entry is going to create a good and healthy competition for all of you. It's going to basically benefit the customers. We as a central bank are working for banks, but more importantly, we work for the customers. So 3 or 4 questions which I thought I could take up before I go to my session. Is it okay? 20 minutes allotted to me. I would request one of you, because as faculty members we speak for hours at a stretch. There's no clock. In our college we have a clock in front of us so we can time ourselves. 20 minutes allotted. It's 12 o'clock now. It's 12:10 now. 12:30, one of you can please raise your hand asking me to stop. I'll stop and then take questions. Is it fine? Any volunteers for that? Yes or no? Anyone would volunteer? Time officer is not required. Fine. Talking about financial inclusion, yes. This concept or the theme for this particular colloquium is metamorphosis in the Indian banking system. When you hear the word metamorphosis, metamorphosis is always change for the better, right? When you hear the metamorphosis of the larva into a frog, you have studied in your biology classes, you find a tadpole getting into a frog. So metamorphosis always results in one step, a better thing. But financial inclusion, metamorphosis, it sounds a bit paradoxical, yes or no? We're talking about financial inclusion. Metamorphosis should have actually meant banks going in for derivatives, high-tech products. That would be what actual metamorphosis is. But when we talk about financial inclusion, I wish to tell you that that is the need of the hour. Okay? At the outset, I would like to thank the students from Vamnicom, because they met us, they interacted with us 10 days back. And I basically didn't talk much during the interaction, but I was really happy that if young students like you can come up with subjects like this, India is in safe hands. Probably next year you're all going to get into the banking industry. Probably we have India in a set of 100 safe hands. Okay, keep up the good work and please continue to ensure that even as a banker, you spread the message of FI to ensure the economic growth of the country. Now, talking about financial inclusion, yes, issues and challenges. I was asked to speak on issues and pitfalls. Without taking permission from anybody, I just tweaked the subject. I thought pitfalls would be a little misfit here from a regulator. Pitfalls basically mean the drawbacks. Okay, financial inclusion has no drawbacks. There are only challenges. If I were to speak to you about the pitfalls in financial inclusion, I would not be doing justice to my organization. So I tweaked it with the word challenges. You have enormous challenges as far as financial inclusion is concerned. Now, when we talk about financial inclusion, the first concept that you need to bear in mind, please don't look there, that's only for my reference, you can look at me. Because if you read it, then I stand here as a non-performing asset. When you talk about inclusive growth, there's a lot of talk going about inclusive growth in this country. When I ask my participants, what do you mean by inclusive growth, they all say that if every Indian is able to get a square meal, maybe migrate from a bicycle to a two-wheeler, maybe all of us stay in a 1 BHK or a 2 BHK flat, that will all be inclusive growth. Would you all agree with it? Is that what inclusive growth is? Please respond. Is that what inclusive growth is? No. Inclusive growth basically means equitable distribution of opportunities. That's how you define inclusive growth. All of you are sitting here privileged to have got a bachelor's degree or a master's degree in management. The reason being your parents could afford it, right? You had an opportunity to come here and learn. You are able to give back to society basically because you had an opportunity to learn. But there are so many people just outside this auditorium who also, if they had the same opportunity, would have been able to perform and generate some income and maybe come up in life. So when you talk about inclusive growth, which our Prime Minister talks about, our Finance Minister talks about, I talk about, all of us talk about inclusive growth. When you talk about inclusive growth, it's not making everyone rich. We cannot have 1.2 billion Ambanis in this world, right? In India, we cannot. What we can aspire is make available equal opportunities to all. It's happening in the education field, the Sarva Shiksha Abhiyan. It's basically making available primary education to one and all. So also when we talk about banking, financial inclusion basically leads to inclusive growth. If I make available, if a bank makes available some banking services or products to customers or to clients or to the rural folk, I am basically helping in inclusive growth of the country. So that is what inclusive growth is. So when you when you hear this topic about financial inclusion, it basically caters to inclusive growth. It's one aspect of inclusive growth. Talking about financial stability, yes, we all aspire for stability, right? From a banker, we aspire for financial stability. We all are mentally stable, right? Yes or no? Physically, we are stable, mentally stable. But from a banker, from a regulator, what we expect is financial stability. And the triad of financial stability encompasses three things: financial inclusion, financial literacy, and consumer protection. Three important aspects which totally add up to financial stability of the country. We are all privileged to have been born in India. How many of you feel you are not privileged? It would have been better off living maybe in California or so? Yes? Are we better? Are you all happy being an Indian? Yes, that's the spirit. So for financial stability of the country, what we basically need is these three things: financial inclusion, financial literacy, and financial stability. Now, before any movie, probably if you see Chennai Express also, you have a trailer. So I'll just, before talking about inclusion, I'd just like to tell you what exclusion is. Our country, the reds are the places where the exclusion is as high as 75%. Okay? The greens are the ones which are quite okay, where the exclusion is less than 25. Yellows are exclusion between 25 to 50%. The blue is 51 to 75%. Mere statistics, but this actually show how much of business potential is available to banks. Okay, we have huge areas in the country where less than 25% of the population or maybe 50% of the population are outside the ambit of banking. So the financial exclusion region-wise is quite high in this country. Talking about the history of financial inclusion, well, it's not a new thing. It's just an old wine in new bottle. When banks were commercialized or nationalized, when banks were nationalized to be more precise in 1969, the basic objective of nationalization was to ensure social banking. So that people banking in 1960s were catering only to the rich folk. But the objective of nationalization, the first phase in 69, the next one in the 80s, were basically to ensure that banking penetration happened. So financial inclusion did not take birth just 2 years back. It's been there right from the time of nationalization. But after that, we also had schemes like the lead bank scheme, the service area approach, priority sector, what Suraj spoke about. These are all basically confined to ensuring that social banking does take place. Formation of self-help groups. Yes, that's also an initiative which came up in 1992. Basically to ensure that these self-help groups, as a group, they grow up and end up into a micro-enterprise. And these are basically financial inclusion initiatives were aimed at ensuring that banking reaches your poor people in the country. Results up to 2005, because of all those efforts, brick and mortar infrastructure expanded. Yes, you could see a brick and mortar branch in many places in the country. Number of branches multiplied tenfold. You had 8,000 branches in 1969. It went up to 99,000. I'm talking about 2005. In 2005, around 99,000 branches. Banking, however, did not reach a large section of the population despite all those efforts. Out of 6 lakh habitations in the country, you had a physical branch in only 36,000 villages. Okay, so almost 5,40,000 inhabitations not having a physical bank branch. 40% of the population across the country had bank accounts, and insurance cover was as low as 10%. So it's like the story of the shoe company, which the chief guest spoke about in the morning. Avenues are there for banks, okay, because you have 5,40,000 villages which are yet to be covered. So 40% of the population have banking, so 60% outside the ambit of banking. So you have a big potential. And this is the current position. Maybe after financial inclusion came up in its new avatar, that's in 2005, when we formally came up with this new word called financial inclusion in 2005. Now the banking connectivity has been extended to almost 2,68,000 villages. When I talk about banking connectivity, it's not necessarily brick and mortar. It could be in any form of a bank. It could be a banking outlet. It could be an ATM. It could be an ICT based, a BC model. It could be a kiosk banking. In whatsoever forms of banking, you have a outreach to around 2,68,000 villages. All unbanked villages with a population of 2,000 and above have been covered. Okay? This is something which the RBI mandated banks to do. We asked banks to identify villages having population above 2,000 and which did not have a bank branch. Around 74,400 villages were identified. March 31st, 2012 was a deadline, and like obedient students, banks obliged. Okay, other than 200 odd villages, 99.8 or whatever the statistics show that excepting 200 villages out of 74,000 odd villages have been covered with a banking outlet. Don't ask me whether banks, those have been on compliance mode or are banks asking. Probably you can take it up as a research project. In these villages, is banking really happening? Okay, I leave it to you. Number of business correspondents, which people also call it as banking correspondents. The terminology is basically business correspondents, increased to 2,21,341. Number of basic banking accounts, 182 million. Huge statistics, okay? But these figures should not make us complacent. There is much more to be achieved. Now, talking about 2 pillars again. So far, till 2007-8, you have been hearing a lot about financial inclusion or Vidya Samaveshan, as they say in Hindi. We have been catering to financial inclusion. We asked banks to do, banks did it obediently. But subsequently what we learnt is, banks opened accounts. It's like giving a microwave set to a poor villager. You give him a microwave set, you dump it, will he be happy or no? Suppose LG company were to come here and say that we'll distribute 1.20 billion population, we'll distribute microwave sets. And all of you go, we distribute 1 set each to each family. Would they be happy? They may not. See, unless you tell them the use, how they can use it, or if electricity is not available, you give them a microwave, it's just going to be maybe an item which is displayed, an asset, which may not have any value whatsoever. So also, what we found out is, bankers were readily opening accounts, calling customers, deadline March 31st, accounts were opened, but what use were the accounts to the customers, none of them knew. Accounts were opened, we have records, statistics, accounts have been opened, but it did not make much sense to the borrowers, to the customers. So what we found during some studies were, most of those accounts were opened and subsequently became dormant. Okay, so now we have slowly moved, so supply side was taken care of. We took care of the supply side by asking banks to open accounts. Now what we realized is, Supply is meaningless unless you create a demand. That is where the concept, the other side, the right side comes in, financial literacy. So now you'll be seeing that RBI also talks a lot about financial literacy. We need to make people literate about what banking, what savings are all about. Are we together? Are we all together, or am I going too fast? Should I go faster? Same speed, okay. So financial inclusion, the supply side parameters have been met by banks. Now the demand side imperatives is what's still going on. We have asked banks now to go fast on the financial literacy level. Now, how would you define financial literacy? A very good definition. This is what was suggested by the Rangarajan committee, which went into financial inclusion. Financial inclusion broadly refers to the process. I have underlined a few words. It's a process of ensuring access to appropriate financial products and services needed by all sections in general and the vulnerable and low-income groups in particular at an affordable cost in a fair and transparent manner by mainstream institutional players. So, when you talk about process, what is process? How do you define process? It's an ongoing thing. So, financial inclusion is not a one-time measure. I open an account, I get him into my books. Have I completed financial inclusion? No. That is where probably we have erred. We looked at it maybe as a process, as a one-time measure. I open some accounts, show my statistics, FI is over. So it is a process of providing access. That is what's more important, access and affordable. The services and products that you provide to your customers should be affordable. And we are not just confined to one section of the society. It is for all. You and me are also part of financial inclusion drives. But in particular, it confines to the low-income group who do not have recourse to the institutional borrowers. Okay? And what is another important point is in a fair and transparent manner. How fair and transparent are we? Probably 2 days back you would have seen the paper, the SMS that you get. Probably you are also happy to get SMS on your mobiles that you have been debited and credited with so much account. But it's only now that you learn that you pay 60 rupees per year to your bank for getting these alerts. Okay? So are we transparent? We are, or maybe not. Okay, probably the account opening form that you give, you blindly sign a lot of things. These would all be there, that you'll be charged and things like that. Probably we don't give a thought to reading those things. So if you're able to provide these things to the people, then you can say financial inclusion is taking place. Significance of FI? Yes, it's a win-win position for both the banks and for the customers. See, banks are commercial entities. What is the main motive? What's the motive of banks? Please interact, please interact. What is the motive of banks? To take money and give money. But then ulterior motive, what's the motive of banks? They need to earn profits, right? All of us, you're all studying, basically why? To earn money. Any of you just taking up this course and willing to just give away everything in charity? No. So banks are commercial entities for whom profit is the motive. Okay, no bank would like to survive to be there in the red. So during the course, it's a win-win position for them. So if they are able to get customers, if they are able to get business, it's a good position, it's a good proposition for them. What about customers? If customers are able to get access, it's a good thing for them also. Their deposits which were lying vacant, maybe in the mud cars, maybe under the pillows, maybe at the places where they kept the photographs of the gods. From there the money would come into the channel, and what would the bank do? It could maybe transmit it to the useful sectors of the economy. So it's a win-win position. Financial inclusion is a win-win position for both the customers. They earn interest. Banks can make use of the resources. They can allocate those resources. They can have a portfolio management of whatever they get. So it's a good position for both of them. It can augment the domestic demand on a sustainable basis driven by income and occupation growth. It can also result in higher savings which is pooled from these so-called small customers. Okay, we in banking parlance call it the CASA deposits. Current account, savings bank account, which does not entail much of expenditure for the bank. Okay, so these things come into the bank, and it also results in expansion in credit and investment by banks. Probably you would expect some good treatment from the banks, right? They may offer you a cup of tea. But if we were to walk in, removing the shoes, ties, walk in the dhoti with bare feet or maybe with slippers, probably the response would not be the same. It's human tendency, right? We're not demeaning anybody. Probably when all of us remove our suits and get into the actual field next year, we may also behave the same. For us, it's the high net worth individuals who count. If Malia were to walk in, Malia 10 years back, not the Malia of the last 1 year, if he were to walk into a branch, yes, my yearly targets are over. One customer, my targets are over, I can boast of it. So, these are basically, we have a human tendency to reason out that the poor have no assets. If this guy comes to me, he's of not much of worth to me. This is a thing which goes in the human psyche. The second is they have nothing to offer as collateral. Yes, the example we heard, 4 lakhs stuck, no collateral, so might as well give a 4 lakh 10,000 where I am safe. See, bankers are not to be blamed because banking also, they are accountable for every transaction that they undertake. So if you do not repay the loans, who has to bear the brunt of it? The poor branch manager. Okay, so they have nothing to offer as collateral, they have no business experience, you have to keep explaining things to him. These are some reasons that you attribute to the high level of financial exclusion. Now talking about India's position also, see, we normally have 2 indices, or the financial inclusion index is basically measured on the number of branches per 1,000 population and also the number of ATMs or the bank credit. So if you look at it, India is not in a very good position as compared to other developing countries. Are we developed or are we developing? We are developing, yes. I think 15 years back when I was, not 15, 20 years back, when I was a student, I also studied the same thing. India is developing. My daughter last year, class 10, she studied the same thing. India is developing. Probably my grandchildren also may study. So who's going to change it? Who's going to make it a developed economy? Who? You, yes. If you, the reins of turning our country into a developed economy and rewriting our history books rests in the hands of all of you. Okay? You can do it. Change this history. See, so that at least we can say this group of students from Vamnicom were able to rewrite history. Changing developing economy to developed economy. The onus rests on each one of you. So we are not in a very good position. Maybe comparing it to Afghanistan, Iran and things like that, we are better off. But then, comparing it to the developed countries, we are in a very bad position. I leave this presentation back, so at leisure you can go through it and see where we stand. Now, the policy approach. Basically, when you talk about banks, FI, the challenges that we face is, there are 2 approaches that banks can adopt to FI. They can either go in for a minimalist approach or they can go in for an expanded approach. Minimalist is, give the least possible what is available, maybe a savings bank, and stop at that, a no-frill accounts. An expanded would be you give a bouquet of products to him. You get him into the ambit of banking, open a deposit account, slowly give him some credit, have an overdraft. All this would be what you call an expanded approach. So what we find is, the approach has been a minimalist approach. I should ensure that banking is happening, FI is happening on this mode. So unless all of us gear up and switch over to the expanded mode of financial inclusion, things may take another 10-20 years to happen. Okay. What are the challenges? Yes, challenges are basically hand-holding support. I'll just tell you. Yeah, I'll just talk about a few challenges. The first challenge that we face is financial literacy. People are not aware. Who needs to be given financial literacy? Are you literate? Are all of you literate? A very easy question, yes or no? Yes, 100%? Very good. I am not. Okay, I am not literate. The so-called literacy that we talk about, we are not financially literate also. We are literate, yes, we have a basic education, we get a certificate, we get a degree, but the level of literacy is not to the extent that we need to have. And as far as financial literacy is concerned, the level is even more pathetic. Now, who needs to be given financial literacy classes then? Who needs to be given financial literacy classes? RBI officers? I'm not asking like Crorepati, Kaun Banega Crorepati, 4 options. Just give me 2 options, yes or no. Do RBI officers need financial literacy classes? No, good. At least my collar is up. Yes or no? Yes, they need it. Do your branch managers or the resource person sitting here, do they need to be financially literate? They have to be given awareness programs. So the users, the players, all of them need to be financially given some literacy awareness programs. If the policy makers, if RBI remains insulated, if I say that I don't want to learn, I know everything, and if I were to make a policy which would suit none of you or none of the poor persons, would it help the country in any way? No. The bankers need to be trained depending on the requirements. If they need to come up with some customized products, They need to be aware of what the customer pulse is all about. So financial literacy, all sections of the society. Maybe the levels are different. The literacy that you talk to a person on the street may not be the thing that you talk to a person sitting in the branch manager's cabin. May not be the thing you talk to a person from the Reserve Bank or any other institution, financial institution. So financial literacy is the need of the hour. That is why Reserve Bank and the Government of India is laying a lot of emphasis on financial literacy. I'll talk about two things that you can do after listening to me. Okay, it's just a humble request because Reserve Bank, we never act tough on anyone. Be morally swayed. It's a moral suasion that we work on. Even if you read our circulars, we never become so harsh. We talk about you may, you do, all that. Okay, we are very gentle on whatever instructions we give, but bankers, the good people that they are, they oblige. They think, yeah, this Bada Bhaiya is talking, so I might as well listen to it. We are never harsh on them. So when you talk about financial literacy, you have a role. We have asked banks to go in for financial literacy centers. In each of the districts, there is an LDM office, a lead district manager office. We have asked them to have an FLC, a financial literacy center. All rural branch managers have been asked to conduct at least one financial literacy camp every month. So this is the emphasis that we have given on financial literacy. This is a mandate. All rural branch managers will compulsorily conduct one financial literacy camp, and it's not just for compliance. They need to maintain a database on people whom they have called for the meetings, for the camps. Okay? So these are things what we have actually envisaged so that if financial literacy happens this way, things would be much better. Financial inclusion would take place in a much better way. Yeah. Time is up. Yeah. Just 2 minutes. So what is the role that you could have? I'll just wind up that presentation. You can assume the role of an ambassador of financial literacy. After listening to this, probably once you get into a bank, you can assume a bigger role. But as and when you sit here, probably you go back. If 100 of you were to train at least 10, how many people would be able to reach? 100 into 10 is 1,000. So see if you can target one village. If each one of you targets one village, we'll be able to reach out to 100 villages. 100 villages would be 100 into 2,000 on an average, a population of a village. So that is the thing that you can take upon. You don't have to get into the IAS to get the post of a ambassador. We treat you as ambassadors. Take this up as a challenge. Once you go back, you need not have a structure, you do not have a letter. See if during the course of your project or during the course of your studies here, if you can take up some initiatives on educating people. Maybe start with your children of your domestic helps. People who have not been able to open an account. If you see you can mediate, if you can be the mediator, getting them to a bank branch, see if you can open an account for them. Okay. The second thing that you could do is, you have a spate of opportunities coming up in the banking industry. Yes. If at all you're interested in coming into banking, we have banking just expanding. It's a chain reaction. If you see the priority sector norms also, earlier we had just two classes of priority sector. We had the Indian banks and the foreign banks. Now the foreign banks have again been bifurcated. We have taken the Indian banks plus foreign banks with 20 or above branches as one particular group. They have the same mandate, 40% priority sector, but over a period of 5 years. So you see, we have given equal importance to them also. So probably you'll see a lot of branch expansion as far as the foreign banks are concerned. New banks coming up in another 2 years. So you have opportunities. See how best you can make use of the opportunities. Okay? So I think with this I'll close because I already got a thing. Any questions? Yeah, please make it fast. Yeah.
Basel III norms are helpful for banks to make capital adequacy.
Yeah, so Basel III, as far as Basel III is concerned, I think we have a guest faculty coming from RBI in the post-lunch session. He'll answer your question because he's handling Basel III. Okay. If you have any questions on banking and FI, please. Yeah. Yeah, a little louder.
Sir, I'm Rutuja from second year.
Yeah.
Sir, as we have already adopted core banking system,
right.
So while extending services to the rural area, which has a lack of infrastructural facilities,
right.
how banks are going to face the challenges? As like implementing those core facilities certainly needs infrastructure.
Right. So good question. When you talk about the core, see all the banks except the cooperative banks have been given a mandate to get into core by 30th September 2013, of which most of them, all the public sector banks, private sector banks, the RRBs, these are all in core now. Okay. See, once they were in core, what we have asked is, it's not easy to have FI with a brick and mortar wall. branch. So we have asked banks to appoint business correspondents. Business correspondents basically work on the ICT model, information and communication model. They come to the doorstep of the village. They have a machine called the POS, the POS machine. They have cards. Again, your accounts are enrolled. Enrollment takes place on your biometric details, either your fingerprints, your retina. So we are slowly doing away with branch banking. It's slowly moving to a concept of branchless banking. Not branchless banking in the term that we use internet banking and all that. It's basically as far as smart card issues are concerned, the POS machines are concerned. So we have this person who will cater to a few villages. At appointed days, appointed time, he goes to a village and he transacts on behalf of the bank. So banks are appointing business correspondents. Okay, so they will be working as agents of the bank. So as far as this technology is concerned, this is how we are making use of the CBS. So when he comes to, see, a customer of a BC is a customer of a bank. So if a person in the village is a customer of the BC, he can transact, he can deposit his money, he can withdraw money up to certain limits which banks have set up on their own. So he can transact on a real-time basis. Some banks work on the online mode, some work on the offline, wherein automatically they get linked to the CBS. Some of them route it to the FI server. So there could be a time lag. So because of CBS, ICT transactions have been made possible. Okay, you're having such a reach basically because of CBS. Now what are the issues? Yes, connectivity is a major issue, especially in the far-flung areas, because all these work on SIM. It's basically through the SIM cards. So there are times because of connectivity issues, they are not able to transact business. So these issues are again, maybe in a couple of years, we'll be able to mitigate these problems. But ICT is happening basically because of CBS. Have I been able to answer your question? Yeah. Please, any other questions?
Sir, one question is there. So
Yeah.
what are the different types of strategy for making the financial inclusion? This is the first question. And second one is what is the major problems? Already you said about the challenges. I want to know the major problems in financial inclusions. If you can
Major problems from the bank's perspective, customer's perspective, regulator's perspective, whose perspective?
banks, related to banks.
Okay. Sit. Your first question was, what is the
Different
first?
strategy.
Different strategy. See, when you talk about our country, we have gone for a bank-led model. Like there are countries like Brazil who have gone for a mobile operator-based model. So we felt that this is the best financial intermediary. A bank is the best institution which can undertake financial intermediation. So Reserve Bank has mandated that we go in for a bank-led model. So we have a bank who appoints a set of BCs, a business correspondents, who again have to tie up with a technology service provider, maybe with a corporate group or a company which has people whom they can send to the field. So the model that we have adopted is a bank-led model. I'm still not able to understand what you're trying to ask me, the first question. What is the model? See, the strategy that we have adopted is we have an FSDC, a Financial Stability Development Council, which is headed by the Prime Minister of India. So the importance given to financial inclusion is at that level. Then they also have appointed an NSFE, a National Strategy for Financial Education, who is working out, who has already come out with a draft financial education plan. If you go to the Reserve Bank of India site, you find that we have come up with some publicity material for financial literacy. As I told you, the major challenge is FL, financial literacy. Towards that, we have worked out something called the financial diary, financial guide, financial posters. Just get to the RBI site, you can see all these things have basically evolved because of our efforts with the NSFE. Another thing is, we feel that banking should be taught at the school level. So we are in talks with the NCRT, maybe to include a few chapters on banking at the school curriculum level, maybe from classes 6 to 9. In a few states, it's already been implemented. At the national level, we are trying to roll it out. So these are the things, these are the strategies that we have worked out. Okay. Then NABARD has got two funds called the FIF, the FITF, the Financial Inclusion Fund, the Financial Inclusion Technology Fund, which banks can take recourse to in case they need any support. Okay. I think I've been able to, what's the second thing you said? What are the issues? Major problems faced by banks. See, one problem banks face is, I spoke about the BCs. These are basically appointed by banks. Some banks have kept a fixed incentive for them. A fixed, basically it's attrition that you see in the BCs. People take up the role of a BC, but maybe in a period of 3 months, they're given some training by the banks. But due to non-business or due to incentive-based payments which are due to them or non-payments, no payments going to them, there is a question of attrition. So many of these BCs, they leave the job. Okay, so that is one problem which banks face, that they have to constantly keep employing people to take up the role of a BC. The second thing is technology related issues. Like I told you, it's all on ICT. So cards are issued. Now, card issue is not the role of a bank. You have a technology service provider. So, when we tried to introduce FI, it was on a very large scale. Our country is big. This was on a very large scale, and such efforts were never taken by any country. So, we had few players who were able to provide the technology. All banks wanted to get into the bandwagon. The number of companies who were able to help or give technology support was very few. So, enrollments would take place, but smart cards would come maybe after a lag of 6 months, 1 year. So, customers also lost interest. Another problem that customers faced is, see, customers basically go by seeing is believing concept. Like for you and me, we are prepared to work on internet banking also. We know that our transactions are happening. But for a customer, going to a bank branch gives him much more confidence. He has a confidence inculcated in him when he sees or talks to the branch manager. So this thing is not happening in the BC model. It's one guy who walks to a bank, to a villager, takes money. So maybe that trust is also lacking. These are some of the issues that we are facing. Connectivity is another issue as far as technology is concerned. Yeah. Any other question?
Only one last question. Yeah.
Yeah.
Sir, I'm Narendra Pawar from second year. My
Yeah.
question is regarding new concepts are being introduced in the budget, Indian budget this year, like women banking. Sir, will it be really helpful to make women more bankable? And is there any provision to open branches in rural areas, and how it will add value in the financial inclusion?
Yeah. See, we are good question. Now, there are a lot of women here, so I'll never say that women are not bankable. Women are the best bankable assets that we have. Okay, because you don't want to be beaten up. So when you talk about women banking, see, the concept came up because obviously when you look at the rural populace also, what we find is women are the best bankable. If they take up an initiative, okay, they see to it that it reaches its ultimatum, especially the concept of the SHG groups. Now groups which are again made up of women, they are the ones who really are able to derive some sustainable income. So women bank concept also, it is happening. And whether it's successful or not, see, we are going on a very positive note, it should be successful. Basically because we find that a women bank concept, especially in the cultural environment that we live in, a women bank may be able to at least remove the barrier which exists between the male and women in our country. We are a country of a lot of culture differences, okay? Like we still think twice before shaking hands with the women, no matter if even if you're emancipated or even if you're educated, probably a tendency for you to say hi or maybe fold your hands or whatever. Okay, so the rural folk, they still have that barrier on opening out. The cultural differences are there. So as far as I feel, women bank, yes, it will be a good example. Okay, we have the Seva Bank, which has got a lot of branches which operate totally with women, and these are successful models. Then talking about how bankable women are, yes, women are the best entrepreneurs, provided they get the right guidance, the right training, and customized products which